Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, December 1st, 2016. So they started off the month really, really strange. We saw the NASDAQ get absolutely pummeled today, and the S&P was down 7, but yet the Dow was up some 68 points. So really, really strange day today. The markets are, they're not really running together, and that makes things difficult. It actually made things difficult with my original, short thinking, because we saw money rotate from the Dow and the Russell 2000 into the Nasdaq and the S&P, and it caught me by surprise on it. And that's the tough part about when the indexes are not running all together. It's usually not a good sign, because you want, all the cylinders have to be running together. Otherwise, what happens is certain sectors, certain indexes have to work a lot harder to either keep things moving up or going down if we're in a downtrend. So it makes things difficult. It's usually not a bullish sign just because everything's not moving together. But right now, I still think there's some more room to go to the downside on the S&P. And what I've been saying is, I don't think this is the big one at all. I think it would make sense if we get a pullback down to this to the 2155, or better yet, even down to the 2117, because that's only a 23% retracement from this low to this high, and we have these bearish divergences that have been in place, and we haven't really had any pullback. So if we come down to this area here, what's going to happen is we're going to see the technicals start to drift down like this. And then I'm anticipating we're going to get another pop above these highs here. And what will happen is it's going to set up another set of bearish divergences. And from there, that's the decline that I think is going to take many people by surprise. And overall, bigger picture, it will be a very, very healthy pullback, but we're not used to seeing, 10, 15, 20% pullbacks, and that's really what seems to be setting up right now. But overall, it wouldn't be a bear market. It's most likely going to be some kind of retracement before we head higher after that. But that's a longer term view, and I'm not really worried about that, because I may be dead wrong and we may turn into some kind of bear market. But right now, what would make the most sense and what we're most interested in is this pullback coming someplace down to here, and then having another push to the upside. Maybe goes to 2250, maybe goes to 2300. We'll have to wait and see on it. But if it comes down here, what it's going to do, it's going to kind of prove to the bulls that there's support and there's buying power, and then from there we'll probably get the much larger move to the upside. Now the 60-minute chart, this is what is making sense, where there still should be more room on the downside, because we have the bearish divergences here. So I said a bare minimum on the downside would be the 2183. We're pretty much there. I still think we're coming down, because we went through the 50-day moving average here. So I think we're going to come down somewhere to the 2164, maybe the 2148 level. But like I said, on the daily, just a 23% retracement is 2117. So that's an option too, because that's actually in between the 62 and the 78% retracement. So that is, leave that door open as well, because it's we've had a pretty extended run. We have huge bearish divergences, and we're at support levels right now where I said this is the zone that the bulls have to defend. If they don't, it's going to be a very, very fast drop, maybe a day, maybe 2 days, that will bring us down to these levels here. At least that's what would make the most sense. Now, if they hold it here and head higher, really what the bears have to defend is this 2202, because you can see it's the mid pivot and it's also the moving average right there. So this, if they can get above that, then maybe it was just a shallow pullback, and they're going to head up and try to grind things higher. But I don't think that's going to be the case. I think they may try up and then head down. And something I mentioned in the sentiment timing report was when we're in an uptrend like this and we get these pullbacks, typically it's let's say one step up, two steps down, and it's not like a huge move like this. What happens is it goes down, pops up, goes down, and it kind of, wears everybody out. And what I think probably the best way to look at it is if you're shorting, right, the market, what you want to do is take profits quick if you get a move in your direction. If you're looking to get long the market, again, I would wait until we get down into one of these support levels to look to start buying, and we start getting some bullish divergences. So we're at an important area right now. Really, it's this: if the bears push it through this 2178, we're probably going to get a quick move down to this level here. On the upside, the bears want to defend this 2202 level. 15-minute chart, I had showed you this channel that we were in. We broke through it. Now we have a downtrending channel. So again, up here, you want to see this the 2198 and the 2199 area, hold it down, and just continue in this channel. And it's going to be something that allows the the technicals to reset again and prove to the bulls that support is going to hold. Now, from here, you can see I'm not sure if we made we did. So we have a little bit of a bullish divergence right here, and you can see that we're pretty oversold on the MACD here, or the momentum. So there's a chance they do try to pop it. And like I said, keep an eye on this 2202 level. If it holds it down, this is where I'd be looking to probably add another short. And then really the downside target is a minimum that I would be looking for is 2164 down to the 2148. So with that, have a great night, and I will talk to you guys tomorrow.